Hi everyone, my name is Nukmara Kristina binti Muhammad Zawawi and my metric number is 8228089. I will give an introduction about our assignment. This assignment was required us to analysis and interpret the company's financial statement. What does that mean? Financial statement analysis and interpretation is the process of examining and assessing a company's financial statements to understand the financial performance and position of the business. In financial statement have include many information of the company such as their assets, liabilities, equities, revenues, expense and cash flow are the balance sheets, income statements and cash flow statements. They have two methods that we can use for analyzing and interpreting the financial statement, which are ratio analysis and vertical analysis. Ratio analysis have involved calculating and comparing financial ratio that provide insight into company's financial performance and positions. Other than that, vertical analysis will show the relationship between various financial statement items as percentage of a base amount. For the first company, we will go through with Farfetch Berhad. This company was established in 2009 in Johor and founded by Loy Tuan Ee, and they have been listed in Bursa Malaysia in March 2022. This company was appointed by the East Coast Economic Development Council as the manager of a 240-hectare cattle ranch in Muazzam Shah, Pahang. Farfetch Berhad has two factories in Bandar Muazzam Shah, Pahang and Larkin, Johor. They set a sales target of 50 million ringgit for its financial year ending March 2015 compared to the 38 million ringgit recorded the previous year. Farfetch Berhad was growing faster than Mr. Louis could have ever imagined. So, Mr. Louis enlisted the help of his old friend Azmi Zainal as partner and brought in Khazanah Nasional, which is the strategic investment arm of the Government of Malaysia, as an investor for the company. In 2020, Farfetch Berhad established a partnership with University Putra Malaysia, which is UPM, to establish an industry centre of excellence. For a second company, we choose Dashladi Milk Industry. Dashladi Milk Industry has established on 28 May 1963 in Petaling Jaya, Selangor, and it is the subsidiary of Friesland Campina, one of the world's largest dairy cooperative. They have become the first milk company to be listed on the country stock exchange of Kuala Lumpur and Singapore on 24 December 1968, and according to the article that published in 2011, they have led the market share in the growing up segment by controlling 40% of the national market. For this company, in 1983, they just produced milk and market it in plastic bottle. In 1986, they have produced chilled milk and produced fruit, yogurt, and growing milk in 1988. The Dashladi Milk Industry is 600 strong company that offers an extensive range of quality and delicious milk. For 60 years, they have embraced the changing lifestyle of their consumers and evolved to meet their nutritional needs better.
Hello, my name is Kristina Balkis binti Saifah Amruti and my metric number is 8228090. I want to talk about ratio calculation. Me and my friend Shafini are responsible for carry out this task together. We need to do this task by considering the 9 most suitable ratio. The ratio has 4 elements, which are profitability ratio, short-term liquidity, long-term liquidity known as gearing, and investor ratio. First, the ratio we use is the return on capital employed. To calculate return on capital employed, profit before interest and tax divide with capital employed times 100. Second, to calculate net profit margin is profit before interest and tax divide revenue times 100. Third, to calculate asset turnover is revenue divide capital employed. Fourth, gross profit margin, gross profit divide revenue times 100. 5, current ratio is current asset divide current liability. Next, to calculate quick ratio is current asset minus inventory divide current liability. Other than that, to calculate gearing is debt divide debt plus equity times 100. Other than that, to calculate dividend cover is earning per share divide with dividend per share. Last but not least is price per earning ratio is share price per earning per share. On this slide, I have to compare the performance and position of the entity as follows comparison of the two periods of Farmfresh Berhad in 2022 and 2021. These are the calculation of the ratio that we get by using Microsoft Excel. Farmfresh Berhad was listed in Bursa Malaysia in 22 March 2022, so there is no available data to calculate the investor ratio for 2021.
Hello everyone, my name is Nur Shafini binti Azhar alias Azhar. My metric number is AAT20503. I would like to present the ratio calculation for the second part and the third part, which is the comparison between a group and separate entity, which is a subsidiary, and the comparison with another entity in the same industry for the same period. Let's go further with the result for the ratio calculation. This slide shows the result of comparing the ratio calculation between the group and subsidiary for Farmfresh Berhad. Next, this slide presents the result for the comparison with another entity in the same industry. We choose Dash Lady Milk Industry Berhad to compare with Farmfresh Berhad in the year 2022. These are the result of the ratio calculation for both companies.
Hi everyone, my name is Julikiska. My metric number is A2280970. For this slide, I will talk about the comparison of a two period for Farmfresh Berhad. For this slide, I will talk about profitability ratio, which we have return on capital employed. Referring to the table that show in 2021, return on capital employed for Farmfresh Berhad is 18.70%. Compared to 2022, the percentage is decreasing to 7.61%. Low return on capital employed is showing company not making the most efficient use its capital and not proceeding a high return in investment. Next, net profit margin. In 2021, net profit margin for Farmfresh Berhad was 30.78%, and in 2022, the percentage is decreasing to 30.09%. This means Farmfresh Berhad will be able to make a profit of 40 cents per 1 ringgit of sale in 2021 compared to a profit of 30 cents per 1 ringgit of sale in 2022. For asset turnover, Farmfresh Berhad industry has 1.36 times asset turnover, and in 2022, 0.58 times asset turnover, which decreased. This means Farmfresh Berhad not really well in managing its asset in 2022 compared to 2021 to generate revenue. Next, short-term liquidity and efficiency ratio. Referring in the table, Farmfresh Berhad in 2021 is 0.79, and in 2022 is increasing to 3.61, which company is really well in using its capital. For quick ratio, Farmfresh Berhad acid test ratio in 2021 is 0.38 and increasing to 2.80 in 2022, which higher quick acid test ratio is a sign that company doesn't have an issue paying debts. Element ratio for long-term liquidity is gearing, which if we can compare these 2 years, it shows gearing ratio in 2021 is greater than 2022. The greater the risk that the little will be available to distribute by the way of dividend to the ordinary shareholder. Next, for investor ratio, element ratio that's suitable for Farmfresh Berhad is dividend cover and price per earning ratio, which only 2022 years have all data need to include for calculating this ratio. For dividend cover, referring to the table, the dividend ratio in 2022 is 4.55%, which is considered a healthy ratio and keeps shareholder expectation satisfied. For price per earning ratio, referring to the table in 2022, Farmfresh Berhad has 0.33 times, which a low price earning ratio might be interpreted as the market valuing the company relatively cheaply compared to its earnings. It could suggest that the stock is undervalued, but it is essential to consider other factors and industry norms.
Hello, my name is Nurfatu Husna binti Norman. My metric number is A2280971. On this part, I want to tell you about comparison between group and separate entity of subsidiary. On this slide, I want to tell about the comparison of profitability ratios between two entities, which is the group and subsidiary of Farmfresh Berhad. The element on these profitability ratios is return on capital employed, net profit margin, asset turnover, and gross profit margin. On the return on capital employed, it shows that the group entity of Farmfresh Berhad is higher than and more favorable than the subsidiary entity in determining how successfully a firm generates profit from its capital when it is used. On the net profit margin, it shows that the subsidiary entity is more efficient to generate enough profit from sale and better control the operating costs and overhead costs compared to the group entity of Farm Fresh Berhad. The subsidiary entity is able to make a profit of 50 cents per RM 1 ringgit of sale compared to the group entity profit of 40 cents per RM 1 ringgit of sale. On the asset turnover, it shows that the group entity of Farm Fresh Berhad is more favorable at using its asset to produce revenue than the subsidiary entity of Farm Fresh Berhad. On gross profit margin, it shows that the management team of group entity Farm Fresh Berhad is more effective in generating revenue compared to the management team of subsidiary entity Farm Fresh Berhad. Second slide is I will explain about the comparison of short-term liquidity and efficiency ratios between two entities, which is the group and subsidiary of Farm Fresh Berhad. The available element of short-term liquidity and efficiency ratios is current ratio and acid test ratio. Referring to the table, it shows that the current ratio of subsidiary entity is able to pay short-term obligation or those due within 1 year rather than a group entity. Meanwhile, subsidiary entity Farm Fresh Berhad of acid test ratio is good at paying its current liabilities of its current asset, even after excluding the inventory amount under current asset, compared to the group entity Farm Fresh Berhad, which need to do some to avoid the future issue of paying them. This slide is I will explain about the comparison of long-term liquidity ratios between two entities, which is the group and subsidiary of Farm Fresh Berhad. The element ratio are related is gearing. The gearing ratio of subsidiary entities of Farm Fresh Berhad can help investor and analysts understand how much leverage a company has compared to its equity rather than the group entity of Farm Fresh Berhad. Last slide of my part is about the comparison of investor ratio between two entities, which is the group and subsidiary entity of Farm Fresh Berhad. The element ratio is related is dividend cover and price per earning ratio. Referring to the table, group entities of dividend cover are more favorable able to pay dividend to their shareholders using net income compared to subsidiary entities. Meanwhile, the price per earning ratio on subsidiary entities is higher than group entities. A higher price per earning ratio can mean that a stock price is high relative to earning and possibly overvalued. A low price per earning ratio might indicate that the current stock price is low relative to earning.
Hi and Assalamualaikum. My name is Muhammad Shafiq Asfam bin Zulkifli and my matric number is A2280918. I will now talk over the comparison with the another entity in the same industry for the same period in 2022, which between company Dash Lady Berhad and Farm Fresh Berhad. Hi and Assalamualaikum. Over here, I will present regarding the comparison with another entity in the same industry for the same period in 2022, which between company Dash Lady Berhad and Farm Fresh Berhad. For the very first part, I will discuss regarding the profitability ratios, which I will discuss on return on capital employed, ROCE, net profit margin, asset turnover, and gross profit margin. For the return on capital employed, table above shows that Dutch Lady Milk Industry Berhad has a return on capital employed or ROCE of 13.29%, while Farm Fresh Berhad's ROCE is 7.61% for year 2022. It demonstrates that when it comes to generating profit from the capital it utilizes, Dutch Lady Milk Industries Berhad's ROCE is greater and more advantageous than Farm Fresh. Proceed on net profit margin or NPM. Table above shows that Dutch Lady Milk Industries Berhad's net profit margin or NPM for the year 2022 is 4.07%, whereas Farm Fresh Berhad's NPN is 13.09%. It demonstrates that Farm Fresh management outperforms Dutch Lady Milk Industry Berhad in terms of producing enough earnings and keeping operating expenses under control. Moving on to the asset turnover, table above shows that Dutch Lady Berhad's asset turnover for 2022 is 3.26 times higher than that of Farm Fresh Berhad's, which is 0.58 times lower. It demonstrates that Dutch Lady Milk Berhad outperforms Farm Fresh Berhad in terms of generating revenue from its assets. For the last one, which is gross profit margin or GPM, according to table above, Dutch Lady's gross profit margins for 2022 is 26.54%, lower than Farm Fresh GPM, which is 27.16%. Farm Fresh management team surpassed Dutch Lady Mix Berhad in terms of revenue generation. For this slide, I will discuss on short-term liquidity and efficiency ratios, which I will take a look into current ratio and quick acid test ratio. According to table above, FarmFresh short-term liquidity ratios for 2022 are more successful than Dutch Lady Milk Industry Berhad in meeting short-term financial obligations. FarmFresh Berhad has a stronger current ratio and SCTS ratio, which are 3.61% and 2.80% respectively, than Dutch Lady Milk Industry Berhad's, which are 1.12% and 0.59%. Farm Fresh effectively manage current obligations by deducting inventory from current assets. In comparison to Dutch Lady Milk Industry Berhad, there is a need to address debt repayment issues in the future. Let's now jump into long-term liquidity ratios, which I will discuss on gearing. Referring to table above, Farm Fresh long-term liquidity ratios for 2022 are 1.11 for gearing, exceeding Dutch Lady Milk Industries Berhad's ratio of 2.12% for gearing. In Dutch Lady Milk Industry Berhad's year 2022 annual report, debt exceeds equity, potentially putting the company at risk of bankruptcy. For the last slide, I will discuss on investor ratios regarding the dividend cover and price per earning ratios. The table above shows that Dutch Lady Milk Industry Berhad's investor ratios are better than Farm Fresh in 2022. According to the data, the dividend cover and price per earning ratios for Dutch Lady Milk Industry Berhad are 289.2% and 0.42% respectively, whereas for Farm Fresh, they are 4.55% and 0.33%. This clearly proved that Dutch Lady Milk Industry Berhad was more recommended compared to Farm Fresh Berhad.
Assalamualaikum, my name is Mifzah Danish Zulkifli. My metric number is 822800924. I want to present analysis of performance and position of the entity. Firstly, is profitability ratio, which eliminates how well a business generates profit and adds value for investor. We calculated as a ratio, which is return on capital employed, net profit margin, asset turnover, and gross profit margin. The trends indicate a decline in profitability over the comparative period. Notably, in 2022, Dutch Lady Milk Industry Berhad outperformed Farm Fresh Berhad in return on capital employed and asset turnover, reflecting a stronger operational performance. Secondly is short-term liquidity ratio, which is assess the ability to meet immediate obligation. Our evaluation of the current ratio and quick ratio reveals that Farm Fresh Berhad exhibits superior short-term liquidity. However, a concern arises for Dutch Lady Milk Industry Berhad as a reduced short-term liquidity ratio may pose challenges in meeting immediate responsibility. Long-term liquidity ratio, which assess the financial structure of the companies. We calculated the gearing ratio and both companies show low gearing, which Dutch Lady Milk Industry Berhad having a slightly higher ratio. This suggests a low financial risk and a favorable debt to equity ratio for both companies. Lastly is investor ratio, which is crucial for understanding a company's ability to reward shareholder and market valuation. We analyze dividend cover and price per earning ratio. In 2022, the Shadim Industry Berhad investor ratios outshine from Fresh Berhad, making it a more attractive option for prospective investors.
In the conclusion, analyzing and interpreting company's financial statement is important for understanding its financial performance and status. It will compare data to an industry average, evaluates previous patterns, and identifies potential issues. Financial analysis will show the business operation effectiveness, but it also has limitation due to the diverse accounting strategies used by the company. By improved protocol and analysis skill can facilitate in-depth analysis.